Welcome back to Primetime Lawmakers. Last month, the Special Counsel of Tax Reform and Fairness released its report and recommendations to revise the state's tax code. The recommendations have been incorporated into a tax overhaul bill that was introduced in the House last week. Now, many specifics have yet to be hammered out, but in general, the bill would raise sales taxes while lowering income taxes. Now, a few specifics: personal services like haircuts, lawn care, and car repairs may be taxed. Also, car sales done person to person, as opposed to through a dealer, might come under the scrutiny of the Georgia Department of Revenue. Joining me now on set to talk about it is Representative Mickey Schnell, sponsor of the bill and chairman of the House Ways and Means Committee. Also, Kelly McCutcheon, president of the Georgia Public Policy Foundation, independent think tank. It's great to have you with us. This is probably, at least in my mind, one of the most important things we'll do now, because this tax system has been around an awful long time. And Representative Schnell, let's start with you. I guess the first job for you and your colleagues is to hammer this whole proposal into language the General Assembly can consider. Is that the bottom line?
It is. I think a little background was probably appropriate. Last year, the General Assembly and a lot of other people recognized that we have a structural problem in our tax system. It has not been updated in decades, quite frankly, and the basic problem is that while Georgia continues to grow, it's one of the fastest growing states in the country, our tax revenue has not followed that population growth. During this past 10 years, the state of Georgia gained about 1.5 million people, but our overall state tax revenue stayed about level. So we have a structural problem, and in recognition of that, the General Assembly named a special counsel of independent folks to look at the thing and bring recommendations to us as a General Assembly, and that's what they have done. The recommendations are complicated, and there's a lot of them, and we're trying to get our arms around all those things at the General Assembly level.
And before I get to Kelly on some breaking news here about what this thing would actually mean, scoring it, the job one for this special committee is to put all the recommendations on the table so the General Assembly can consider the whole thing as a package. Is that right?
Well, what the legislation called for that created both the Tax Council as well as the Special Joint Committee is that we had to put all of those recommendations in one bill as they were. We've done that, and that's what's been introduced so far. Having said that, that obviously is not what's going to pass, and in terms of all of the details in there, we are now trying to figure out and take what they've done as a template and figure out what will best work for Georgians.
In the end, one of the biggest questions is what tax reform would do. And Kelly McCutcheon, your group has maybe run some numbers that we now know. What?
Well, that's right, not our group, but Georgia's economy is in the doldrums. I think everyone understands that. Just today, we announced the highest unemployment in Georgia's history. Over the last 10 years, personal income growth in Georgia has been next to last in the entire country. We need something to get our economy going again, and tax reform is the way to do it. Reducing income tax rates is what every tax expert, what Ronald Reagan did, even Alice Rivlin, who was in Atlanta this week with the Concord Coalition, who was President Clinton's budget director, she says the key to economic growth is reducing income tax rates. The problem, when the Tax Council issued its final report, not all the numbers were in, so that's why a lot of people thought it was a tax cut. So the Tax Council came back in, number one, and voted unanimously to say this is clearly not a tax increase. This is supposed to be revenue neutral. Number two, last week, Georgia State University finished scoring the bill. What it shows, we do not need to phase in income tax rates over time. It shows that we can go from 6% down to 4%, both the corporate and the personal income tax rate immediately. And we have $348 million left over.
And the reason we can do that is these other ways that we might be able to pick up revenue, collecting sales tax that's been left on the table, makes up for that?
And broadening the base of the income tax, getting rid of some of the exemptions and deductions, going to a flat rate. It brings in much more revenue and it gives you enough money to go in and give tax credits to those on the lower income scale to protect them from being impacted. But it allows us to lower the rates for everyone.
Representative Schnell, what do you see as the goal, the overall goal of the whole reform effort here? Stability, fairness, what is it?
I think bring fairness to the system, transparency, and predictability. again, as people move into this state, we need to be sure that we're taxing things that people use, because the more people that come in, the more people we have in schools, the more state patrol we have, all of these kind of things. And I think predictability and fairness for all Georgians is the primary thing we're trying to accomplish.
What happens if the whole package is voted down? You said a moment ago that they'll have to be presented that way, right? What happens next in the process?
Well, no, what the legislation called for is for all of their recommendations to be put in one bill and to be introduced.
Okay.
Not passed, introduced.
Okay.
And so what we will do is deal with it with what we call a committee substitute. We will take that as the vehicle, and then when the General Assembly comes together and forms a consensus on what should be in the bill, then we'll substitute that bill for the other one.
So this is like a big piece of marble, and the General Assembly is going to sculpt it now.
That is correct.
Okay.
And that's a very important point, Scott, because people have been already looking at the tax reform plan, and they've been complaining about things that are very unlikely to be included in this bill.
Exactly.
I mean,
Like
the
what?
premium tax, the changes in the fuel tax. We spent the last 2 or 3 years putting together a transportation sales tax. I don't think they're going to change the way we tax fuel anytime soon. They're not going to be taxing a lot of healthcare items, nonprofits, a lot of the things that you hear. I mean, I think there are going to be some substantive changes to this bill, and it's going to make it better, and it's going to make it easier. I mean, the Tax Council did a great job. Economically and academically, absolutely the right thing to do. But as Representative Chanel knows, you've got to pass and get enough votes to pass. So politics come into play, and there's some changes. That's where the $248 million come into play.
Did taking away the sales tax on food destabilize our revenue system, and do you see that coming back?
Well, it absolutely did. I mean, all the research shows that the tax on groceries definitely is a stabilizing factor, and it helps the grow your revenues for a long time, gets to that structural deficit you've been talking about. You know, why should we give wealthy individuals, middle-income individuals, a tax break and make it harder for grocers to determine what is groceries and what are not, when we can provide tax credits and prevent low-income individuals from being impacted? It allows us to reduce income tax rates even more. So it's not inherently bad. How you do it is very important. We don't want to hurt low-income individuals.
Do you see that staying in, Representative Chanel?
That's certainly a recommendation of the council. Whether or not I see it staying in there will be a process of it going through the legislative process.
We don't believe that's a deal killer. If it's not in there, that means you just have to give in other areas.
Ways to make it work. Now, there is a proposal to eliminate the retirement income tax exemption. Economic effect on senior citizens. This is one of Governor Perdue's big accomplishments, letting senior citizens get a tax exemption for income that's not wages. Now, does that go away? What do you think?
That's what the Tax Council recommended, and I want to be clear about what that is currently. Okay. It's $35,000 per person, which is $70,000 obviously for a couple. Plus, you factor in the Social Security exemption, it's over $100,000 for a couple that's retired as far as retirement income. I don't see that going away. Even though the Tax Council recommended it would, I don't think that's going to happen.
And that's not going to hurt the scoring you talked about a moment ago?
Again, you have to give somewhere else, but there's some room for give a little bit here, give a little bit there, and that's clearly one of those where it's very difficult when you have a tax break, even though it may or may not be the right thing to do, to take something away retroactively. So I think that's going to be very difficult to keep.
It's an integrated approach, and that is the Tax Council recommendation contain a whole lot of things, and at the end of the day balances out. We're going to have to do the same thing. It just may not be the exact same items in there. Will not be the exact same items in there.
Did the boys in the back room run some numbers on what would have to happen to get rid of the state income tax totally? Put us on more of an even foot with Florida and Tennessee on attracting
I'm
folks?
sure that would be a goal, and I think it's very important for us to compete with Texas, Florida, and Tennessee, and we'd love to get there. But what that means is you're going to have to expand tax on a lot of services and goods, and you see how very difficult that is. Or you have to increase the sales tax rate very high, just like Tennessee has, you know, if you add them all up there at 9 or 10%. And, you know, right now there wasn't the political will to do that. What we see is the incremental approach. Let's get that rate down to 4%. What's not being factored in these numbers is economic growth. We believe there's a supply side impact. We think there's going to be a lot more growth. Small businesses are going to benefit from this, and they create jobs and revenue. So we believe we'll be able to get to 3% in a very short amount of time, in 2 or 3 years. Then you're at a point where you might be able to say, what's it going to take for us to go and get rid of the other 3%?
It's a step in the right direction.
And so the sales tax rate would stay the same. Let's underscore that.
4, 4, and 4 is the recommendation. It'd be very simple: 4% sales tax rate, 4% corporate tax rate, 4% individual income tax rate.
Okay. Where does it happen next? We've heard some conflicting views on how fast this thing may go. What do you think?
We're trying to go as fast as we can. I will say that I'm not particularly optimistic we're going to be able to finish the job during this session. I would hope that we can. But it's a massive undertaking. We got the report the first week of the session. We've been dealing with this matter and at the same time doing what we have to do normally in the General Assembly session. It's possible, but we'll just have to see.
And underlining one more thing, Kelly, the scoring coming back, reducing the state income tax from 6 to 4% would leave us with what kind of surplus if the give and take is allowed to remain?
$248 million. Now, and this is a big deal, Scott. And the Wall Street Journal has already run 2 lead editorials on Georgia's tax plan before the bill was even dropped. This is very big. I think other states are going to be chasing after us if we can do this. We think it's critical to Georgia's future.
We'll watch it happen. Thanks for your thoughts and thanks for your service on this. We'll be watching. Thanks a lot. Appreciate you being here.